What is up, everybody? 11 months ago, I started this channel with $5 million of rental property, and I was also a renter myself. And from that point forward, just 11 months from then, I have now $13.3 million of rental property in Milwaukee, Wisconsin. I'm still a full-time pilot. I'm still a part-time military pilot. I was able to balance all that high rates, uncertainty in not only the economy, but the world at large. And we were still able to grow by over double. So here I am to talk about my portfolio, what it looks like, what we're planning on doing into the future. I'm going to show you all the debt, all the income, the interest rates, purchase prices, everything. You'll be able to see everything behind the hood on our portfolio, what it looks like, what I'm planning on doing in the future, and what pitfalls I'm trying to avoid. The reason I think that's so important is because real estate and social media is full of people selling you fake hopes and dreams. They're trying to steal money from you. There's a lot of people that are doing a lot of shady things out there, and I want to be maybe one of the only antidotes to that. There's only a handful of people out there that are willing to put it all on the line and show you everything that they've got and show all the cards. I want to be able to help just one person produce a profitable portfolio. If they can watch a couple of my videos for absolutely free and gain something that might keep them from giving somebody else money down the road that they don't deserve, then I'm happy to be that person. So for the few of you that are going to see this video, I'm truly thankful for your viewership. We're going to jump over to my computer. I'm going to show you the spreadsheet. I'm going to show you all the updates, the plans for the future, and we'll go from there. So everybody that's watching this, I appreciate it. If you have the time or the interest, leave a comment. If you are willing to subscribe, I'd be more than happy to have you here on the channel, and I promise to deliver more and more truth and leave out all the BS. So when it comes to my monthly portfolio reviews and how we did month to month, those ones are total. I mean, it's literally the spreadsheets that I send to everybody that I'm partnered with and the ones that I review myself. So you're seeing everything. This is my SREO. Schedule of real estate owned. It has everything that I own. Everything that's attached to my name is on that spreadsheet. So if you're truly interested in trying to grow a portfolio and understand what the numbers look like, because nobody wants to talk about numbers, everyone just wants to talk about, well, buy this and flip it for $1 million here, 10 million there, 100 million. These are all just like make-believe numbers. I'm going to show you the real numbers. It takes time. It's slow, but it can be extremely profitable, and I'm here to show you that today. So join me on my computer and let's take a look at it. What is up, everybody? Welcome to my computer. This is the master document. It doesn't seem like much, and it truly isn't, but this is everything. I've blocked out the LLCs and the addresses just to protect everybody that's involved. I don't really care personally myself, but it makes it simpler for you guys anyways, because you don't really care about the ownership. You care mostly about the unit count, which you'll see here is 131. And when I got everything, the name of the financial institution that holds the loan, what I paid for them originally, what we believe them to be worth now, which is kind of a fudge number. This is me saying that. So, you know, obviously I could just write any number I want in here, but I try to keep these realistic because this number, all these numbers are predicated on good data in. So if you put bad data in, you're going to get bad data out. So current mortgage debt is what we owe on the properties. LTV, loan to value. That's my loan divided by my value. 178 divided by 400 is 0.45%. And these percentages become increasingly important as you move through working with banks, buying, selling. They care a lot about LTV, and we'll talk about that in a minute. Maturity date, when the loans come due. All loans for me are generally 5-year terms. Some of them are shorter, obviously with that hard money. I've mentioned Mach 1 before, but some of them are longer, and you'll see some missing maturity dates because some of these deals have not closed or they're on short-term money, which is going to have to get refinanced anyways. We've got gross rental income of 1.804 million. We've got expenses. We've got NOI, which is net operating income. This is your income prior to paying your debt. This is what it costs you to pay your debt every year. $634,000 a year in debt payments. Rest in peace, Dave Ramsey, if he's watching this. Net cash flow, $447,000 a year, and the percentage owned that I have. Our interest rates for those properties, and then my personal equity position, which is this number minus this number, and then divided out based on my percentage of ownership. So you can do the backwards math on that. First, I'd like to clarify that we are currently only at 118 units. This 13 units has not closed yet. You can see the data on that deal right there. We do not have that yet. So you have to take $250,000 right off the top as far as income and obviously all the ancillary expenses associated with it. So this number is really about 1.5, we'll say. Does this really matter? Does the spreadsheet mean anything? No, because as you guys saw in recent videos, I have sewer laterals blow up, I have evictions, I have all kinds of issues that happen throughout the month. I try to capture it with this. My total expenses, I estimate usually about 40% expense rate based on the income, but that fluctuates. Sometimes it's probably 70, 80%, and sometimes it's 10%. So as an average, I say it's 40% into the future, and we'll see if that remains true. This year, at the end of the year, I'll obviously total everything out and see where we fell. But the idea here is the oldest property that I have on the books is from 2021. So there's been multiple properties that are no longer on the spreadsheet that we've sold. We sold hundreds and hundreds of thousands, if not millions of dollars worth of real estate last year, and we exchanged it into properties that are down here. And something that you'll notice is the longer I hold the property, the lower the LTV on average is. There's two reasons for that. One, this property, I've almost paid on it for 5 years, so I've paid this mortgage debt down. But on the backside, I paid $260 for this bad boy in 2021, and I estimate the market value around $400,000 based on the gross rents for the property and just property selling near there. So it's kind of like a twofold attack. You're getting not only the debt pay down from your tenants every single month, but you're also getting the backside appreciation on the market value, and that happens for multiple different reasons. You could say inflation's a reason that goes up. Is this 400 grand truly $400,000? No, because inflation every single year causes the dollar to be less and less valuable. So what's the net difference between these two? I don't know, and nor do I care. I don't have time to worry about that. I'm trying to buy deals. So what I care about is I owe 178. I think it's worth 400. On a bad day, we could probably sell it for 350 and we could escape with our lives and make about 90 grand compared to what we paid for it. As we move down the spreadsheet, you can see the LTVs typically trend upwards. You'll see some anomalies though. This one's already at 0.75. Why is that? Because we bought these for 300. You see that we owe 358. How could that be possible? Well, it's because we did a cash out refinance. They appraised as a pair, it's 2-3 families. As you can see over here, 6 units, 2-3 units. They appraised for 480 as a pair. So we took out a 75% LTV loan on them for 358. And so now we owe more than what we paid for them. What does that mean? That means our cash is out of the deal. That property is now on our books for free, so to speak. Could we lose the property somehow? Absolutely. But what it means is that our original down payment is now back to us. So we got that money back and we redeployed it all the way down here when we bought this group of properties. Wrong group of properties. This group of properties, 14 units. The money that we got from that cash out, we didn't go buy a Lambo, we didn't go get a jet. We paid for this property and we paid 1.096. And I did a video about that one. It appraised for about 1.3 and now we've got it totally stable. So I think it's worth 1.45 because we did a lot of improvements and we owe 870. So the $100 and some thousand that we pulled out of this property, we were able to deploy it here and probably 4 or 5 exit. So you can kind of see, then you'll see the trend here. We're working on a refinance for this right now and this because look at these LTVs. Way low. Most banks will let you go up to 75% LTV on a cash out. Some will let you go up to 80%, but it's not going to be for no fees. We bought these 3 units. We've drastically raised the rents on them, and it's no fault of our own. They're 3-bed, 1.5 bath townhouses, so they have a high demand. So we're going to take out a cash out on those more than likely. And again, we're trading out some pretty attractive interest rates, especially in the case of this one. But as you can see, this one comes due at the end of the year anyway, so I don't get to keep this rate. This is a temporary 5-year rate, and I'm going to have to go up to the market rate. And right now we're getting a hell of a deal with Summit at 5.75, 6.1 with Landmark, and most of the rest of them are going to be higher than that. So as I look at the spreadsheet, I'm just always looking and saying, okay, what can we do? What do we need to do? How can we make this more efficient? Saline Finance. This one is an interesting one. I've mentioned it before. I had a duplex that I had to put $40,000 into the basement with. Well, I paid 90. I owe 144. Guess what? After closing costs, I got about 40 grand and it went into that basement of the other property. So we didn't even get to see that. So we're actually looking at selling this property because the interest rate's so high and we just think it doesn't really fit into the portfolio right now. It's the last remaining south side property we have. And as you look on and on, you can see all the information here. Everything is there. Again, as you get closer to the purchase price, usually the LTV is going to be different because we just bought the properties. We haven't paid them down and we haven't had the opportunity to raise the rents or increase the market value generally. So this is it. This is the master document. 13.3 million in market value. We have $9 million in debt, minus this, of course. So about 8 million, soon to be $9 million in debt. And, I sleep just fine at night. We'll see how this all plays out, though. In a year from now, I could be like, oh my God, I made a terrible mistake. Dave Ramsey was right. But I'm telling you right now, using the debts responsibly, using it to buy cash flowing assets at a good, attractive price. I mean, I don't think there's any better game in town. And obviously I'm doing this as a part-timer. I'm a full-time pilot for 2 different organizations. So I'm not doing this full-time, but I certainly hope to progress to that one day. I think this number is gonna have to be about 400 units, maybe 500 units to justify that move, which would equate to more than likely about $50 million in total assets. So we've got a long way to go. To get from 13 to 50 is gonna be extremely difficult, but I'm not gonna stop anytime soon. Just like with the YouTube videos, I'm gonna keep trucking. If you got any value out of looking at this spreadsheet, leave me a comment, subscribe, let me know that you got value out of this, because I'm just shooting in the dark. I'm showing people things that I thought that I would want to know back in the day, but I don't know. Does anybody actually want to see this? I'm not entirely sure. So let me know. I'll do my best to always provide, solid value for everybody that's watching this, and I'll see you guys next time. I appreciate it and talk to you soon.